With this worksheet, we're going to talk about how you determine life insurance needs. If you're sitting down with let's say we have a client, a couple, right, and we want to ask them some basic questions. We're going to say, let's say that the primary is the husband and the spouse is the secondary on the life insurance policy. That's typically the way it is. Doesn't have to be that way, but it really doesn't matter for this analysis. So we asked the husband, like, look, if your spouse passes away, would you like to pay off your mortgage with the death benefit? And he says yes. So what about, I gotta say yes. And the spouse says yes. So they want to pay off that. What about consumer debt? Do you have a challenge with, well, first of all, say, well, do you know how much your mortgage is? So let's say the mortgage is $175,000. So the next question, with your consumer debt, would you want to pay off your consumer debt? And the primary says, no, I don't need to cover that. But the spouse says, yes, I still would like to cover that. Well, how much is the consumer debt? Well, right now there is $20,000 in consumer debt. Would you like to have funds to pay for the kids' education? And both say yes. Well, how much do you think that's going to cost? Well, let's say we're going to need $50,000 for that. What about final expenses? Yes, let's include that in. And let's say we're going to need roughly $15,000 to cover final expenses. Well, there's two of them, so let's say $20,000 is what we're going to need. So when we go down here, we see we're starting to fill in the actual needs of the clients, right? How much money are they going to need to cover the expenses once the person passes away? So what kind of insurance do you already have? Well, both of them have $50,000 at work. So they have group coverage at work. They also have some personal coverage. So the husband has $100,000, and let's say that the wife has $75,000. So now we're still working towards trying to understand how much money they need to cover the expenses after a person has passed away. The thing we haven't incorporated, though, is the monthly income replacement, right? We know what bills we're going to pay off. Now we need to find out exactly how much money we need to live on after the person has passed away. So let's say that the primary brings in $7,000 a month, and the spouse brings in $5,000 a month. What's the mortgage expense? If it's going to be covered, how much is it? So let's say that it's on a monthly basis, we pay $1,500 is what we pay on the mortgage. What about consumer debt? Well, let's say that there's $600 is what the consumer debt is. Kids' education, if we're going to cover the kids' education, we're going to plan it, but we're already paying some money. So let's just say that it's $100 a month now. Will there be any increase or change in child care should this be? Well, the husband says, well, yeah, somebody's going to have to watch the kids, so that's going to increase $500 a month. Are there any other increases that we need to cover? Well, no, we don't need that. So the primary, from what the primary has made, we still need $5,300 to cover those expenses. For the spouse, we still need $3,300. We have a shortfall. So how long are we going to need this? So the primary says, well, the youngest child is 6. So we're going to need this till that person's out of school. So let's say 21. So we're going to need that for 15 years. What kind of rate of return do we make on our investments? Again, we'll talk about this when we get to the investment chapter, but let's just use a moderate. Let's say 10% is what we can earn on our investments. So if we go back over to the side here again, now we can complete the analysis that the income, to replace the income for the primary for 15 years, we're going to need roughly $500,000. The total amount needed then of that is essentially $1.13 million, and they already have 150. So we're going to need $860,000 on the husband. We're also going to need $447,000 on the spouse. So there's obviously a great deal of funding that's going to be needed and necessary to cover the actual life insurance needs of this client. So again, this gives us an idea, a picture of what insurance we need above and beyond even what we already have.